Hello, Alex here. Welcome to another Daily Defiant. Two crypto industry titans are warring this week, and the stakes are very, very high. Cameron Winklevoss, the co-founder of Gemini, one of the largest crypto exchanges in the US, wrote to the board of crypto conglomerate DCG to call for the ouster of CEO Barry Silbert. And he didn't pull any punches. As one person observed, Winklevoss dropped the F-bomb: fraud. We'll dig into the details, Silbert's response, and what Binance CEO CZ thinks about all of this in today's video. Thank you to Synthetics, an original DeFi protocol with exciting new trading products coming out this month. More on them later. We've spoken about Digital Currency Group, or DCG, several times on this show. It's flown under the radar, which makes sense. It's just a holding company. But everybody knows its subsidiaries, which include crypto publication CoinDesk, Grayscale, the company behind Grayscale Bitcoin Trust, and, most important for today's story, Genesis, a crypto trading and lending firm. Barry Silbert, DCG's CEO and one of the earliest Wall Street veterans to make the pivot to crypto, is a liar and a criminal, according to Winklevoss. Winklevoss's crypto exchange, Gemini, was a DCG customer. It's a bit confusing, but bear with me. Gemini has a program called Gemini Earn, which promised its customers a handsome return on their crypto deposits. Gemini could promise those handsome returns because it entrusted Genesis with user deposits. Genesis, being a lending firm, would lend the crypto, make a profit, and split it with Gemini Earn customers. But that fell apart about a week after FTX did. In November, Genesis froze customer assets, including $900 million belonging to Gemini Earn customers. Fast forward 2 months, and Winklevoss is mad. In an open letter published last week, he accused Silbert of dragging his feet on making Gemini customers whole and demanded that Silbert publicly commit to solving the problem by January 8th. Well, that deadline came and went. In a letter yesterday morning, he said that Silbert and other key DCG executives lied about Genesis' financial health to, quote, mislead lenders into believing that DCG had absorbed massive losses that Genesis incurred from the Three Arrows Capital collapse. By lying, Winklevoss continued, Silbert and company hoped to dig themselves out of the hole they created. Making an accusation is one thing, but Winklevoss says he has proof. We'll get into that and Silbert's response in a moment. But first, a word from our sponsor. Synthetics just released their V2 perpetual futures trading contracts with the lowest fees of any decentralized perps markets available anywhere outside of a centralized exchange. Synthetics perps are available to trade with up to 25 times leverage and optimism through 2 partner dApps, Quenta.io and Decentrix.com. The community intends to launch dozens of unique assets and is developing plans for trading incentives by the end of the month. Back to our story. Recall that crypto hedge fund Three Arrows Capital collapsed last summer. Well, Genesis was Three Arrows' largest creditor, having lent the insolvent fund more than $2.3 billion. The loans were secured by more than $1 billion in collateral in the form of shares of Grayscale Bitcoin Trust and Grayscale Ethereum Trust, both of which are products of DCG subsidiary Grayscale. That left a roughly $1 billion hole that Silbert said DCG, as the parent company, swallowed in order to keep Genesis alive. And a former DCG executive said the same thing in an email to Gemini last year, according to Winklevoss. That executive attached a financial document to the email to prove it. Among other things, the document listed a $1 billion promissory note from DCG as a current Genesis asset. But there's a catch. The promissory note is due in 2032. Quote, a promissory note with a principal repayment due in 10 years falls outside the definition of a current asset by a country mile, Winklevoss wrote, calling the alleged misrepresentation an act of accounting fraud. Now, Silbert addressed this allegation in a letter to shareholders, which he made public Tuesday afternoon. He said DCG hasn't been compensated for the promissory note, nor is the note callable. Separately, DCG contributed about $340 million of new equity across Genesis entities to provide it with additional capital following the FTX collapse, he said. But Winklevoss says there's another act of accounting trickery. He alleged that Genesis had made itself vulnerable to Three Arrows' collapse by lending the hedge fund Bitcoin and accepting a DCG product, shares of Grayscale Bitcoin Trust, GBTC, as collateral. Three Arrows would then convert the Bitcoin it had borrowed into shares of GBTC. Winklevoss called it a recursive trade that ballooned the value of assets Grayscale manages and, in turn, the fees that it generates. According to Winklevoss, Gemini should have characterized those Bitcoin for GBTC swaps as risky derivatives rather than collateralized loans. This original accounting fraud made Genesis' balance sheet appear healthier than it actually was, he said. Silbert insists DCG subsidiaries are totally independent and that DCG has never directed any of Genesis trades. Quote, Genesis had a trading and lending relationship with Three Arrows Capital, and Three Arrows Capital defaulted on its loans from Genesis, Silbert wrote. Separately, Three Arrows Capital was an investor in various Grayscale products. Bloomberg has reported that federal prosecutors are investigating DCG. Whether they see fraud, like Winklevoss does, remains to be seen. And for what it's worth, Silbert says he has no knowledge of the reported investigation, but everyone's watching now. Even Binance CEO Changpeng Zhao weighed in on the scuffle during a fireside chat at a crypto conference in the fancy Swiss ski town of St. Moritz this week. We do not move control of customer assets to third parties, Zhao said. We didn't stake in Genesis, that we didn't touch. We are never going to give another party control over our assets, otherwise we will be liable for them.